Welcome to Business Basics with Samia. Assalamu alaikum. This is Samia Aziz Bhatti, and you are here with me to learn about revenues and expenses. This is the fourth video of our series Elements of Financial Accounting. So let's get started. If you recall in our previous videos, we have discussed the three first elements, which are assets, liabilities, owner's equity. And we discussed about them in a little detail, and we understood that what are the nature of the assets, liabilities, and owner's equity. They are available in separate videos. And now we are going to learn about the revenue and expenses. If you recall that elements of financial accounting are the building blocks of accounting. By building blocks, we mean that they are the foundations. For example, if somebody has to make a building, so the basic building blocks of the that whole building are the bricks. If bricks are missing, the building is weak, and most probably the building cannot be made. But the thing is that to understand accounting, one must know the basic information, knowledge about assets, liabilities, owner's equity, revenue, and expenses. In order to understand accounting terms, it's important that one should be well familiar with these five of the elements. So, getting that importance in our mind, we are going to start our first slide today. Again, this is a recall slide. In this slide, we are going to recall about the assets, which can be labeled as the economic resources of the business, liabilities, labeled as obligations or debts of the business, owner's equity, owner's claims of the business, revenues are the profits of the business, and expenses are the costs of running the business. Now let's go and discuss these both in much detail. After completing the lecture, you would be able to learn, you would have learned the definition of revenues and expenses, the types of revenues and expenses, their role in preparing financial statements, and how revenue and expenses impact business decisions. Let's go with our first slide, which is about revenue. According to the definition of revenue, it is something income or a profit generated from the primary operations of the business. Now, allow me to clear the term primary used over here, because a business which is running and have any kind of, for example, any kind of business that is running, uh, maybe you can call it bakery, a bakery business whose primary operations are making cakes and making cookies. Now, the sale of cake and cookies result in some money collection. This money collection, which is occurring from the sale of the cake and cookies, because a bakery runs on cake and cookies sell, so we call this money as a revenue. The revenue is the profit earned from the business. Now, this revenue can be in the form of goods or services. All right. So maybe, for example, a bakery is selling cakes and cookies. Now, this is in the form of goods or services. For example, a school giving tuitions is example of service. So again, the delivering of service charges some money, which is the revenue for the school. All right. So revenue is something which is coming from the sale of the goods or services. Exclusive activities of business that generates profit. Very important that the activities should be exclusive to the business. For example, if it is a car wash company, so it is very mandatory that the revenues generated from the service of car wash. Now, how much profit is generated per car depends. But the money generated from this service is called as the core activity of the business. A core activity or the exclusive activity simply means that the very, very reason of existence of the business. You can take the example of a clinic where doctor supervises or you know prescribes medicine to the customers through the patients. Patients are the customers, and the doctor is providing a service, and the fees he charges from every customer is his revenue. So the income generated from the fees collection from the patients is revenue for doctor here. So this is the core activity or the exclusive activity. Revenues are always current as they are because they are earned in the same accounting period. Very important to notice because they are current because uh, the revenue is collected within a period of less than 1 year, because not every sale is made on cash. Some sales are also made on credit. Now for the credit sales, we say that we collect the credit within 1 year. Okay, so for all the credit sales, the amount is collected within 1 year. That's why we call the revenue as current, not non-current, which exceeds more than 1 year period. Examples of revenues are sales revenue, service income revenue, rent income, commission income. These are all are the examples of revenue. Next slide tells us about the types of revenue. So we have generally two types. Okay. So the first type of among them is the operating revenue. Now the operating revenue is simply the income generated from the core activity of the business. As I told you in the previous slide that a bakery is running because it has to make cakes, it has to make cookies, okay, and maybe pastries. Now these three items of bakery are going to generate a dollar amount, or for example a rupee amount, whatever, but this amount is treated as the operating revenue. Why operating? Because this revenue is solely generated from the core activities of business. Means that the reason why the business has the name bakery, so it's pretty sure that this business sells the bakery items. If you hear about any school, then you are pretty sure that a school is going to sell tuition services. If you hear about a car wash company, so you are pretty sure that it delivers the car wash services, okay, related to car services. If you hear about any saloon, so you understand that they are going to deliver you the saloon services, right? So each of them have very clear purpose of the business, and the service they are providing or the product they are providing is going to generate them the operating revenue, because these are the core activities of the business. So the retailer of any shop or retailer is going to earn revenue through sale of the goods. The goods can be the example of a cake or a moisturizer or a car. A service company surely sells the services, and the example is a school or a college and the revenue they are earning is in the form of tuition fees. Now there is the non-operating revenue. The non-operating revenue is generated from the other than the core activities of the business. It's very clear because it's not coming from the main source of the business. For example, as I gave you the car wash, mainly the car wash revenue comes from car wash service. As they do the car wash per car, so they are earning the profit. But remember that this is a operating revenue. How about non-operating revenue for the same car wash company? Simply assume that the car wash company has invested its funds, excess funds, in bonds of a government bonds, right? Now these bonds delivers fixed income each month per month, and this income is also the profit or revenue. But the point to consider over here is that this revenue is not the operating revenue. This is not the operating revenue, but rather it is the non-operating revenue. This is the non-operating revenue because it is the income generated from the other source than the business. You just need to understand this, that this income is generated from the other source outside the business, not from the within the business. Okay, so income generated from other than core activities of the business. For example, interest income which can be earned on the bonds, dividend income which could be earned on the stocks, gain on the sale of the assets can be the stocks whose market price has just increased and they have sold it, rent received, for example, from renting renting business, but that is not his main core business. So at the side business is side business. Okay, so not from the main business. That profit is also considered as a non-operating revenue. Now let's see the role of revenue in income statement. What is the role of revenue? The role is that at the top left corner of income statement you will see net sales. The net sales basically is revenue because sales generates revenue. So the revenue for year 2024 is $3,980, for 2023 is 3,750, and 2022 is $3,400. If you see here that 2024 has gained more revenue than rest of the years. Now rest of the elements in the income statement are going to be adjusted from this revenue figure. So this is of much importance. Now cost of sales, if you see, is deducted from revenue $3,100, $2,950, and $2,700. So this way you see the gross profit is generated. The gross profit is the one which is not yet net profit. It's still it still needs to be, you know, some cost needs to be deducted from it. So selling, journal, and administrative expenses after you get the operating income. Operating income, you need to subtract interest expense. Then again, you subtract the loss on the sale of the equipment. Income before taxes, you get EBT. Then after deducting net, income expense, tax expense, you get net income. So finally, you get a net income picture. Okay, and this is only possible when you have a revenue in your income statement. Without revenue, you cannot do any of the calculations. So revenue also helps you to compare your year to year performance so that you know what strategy to prepare or to plan. If you see the revenue was low in year 2022, how could we increase our revenue? Why our sales were less and why our expenses were high? So this is also the importance of revenue in the income statement that any reader or any investor can get through the income statements and can understand the revenue figures. Now the question is that how revenue impact the business decisions. First thing is that it impacts the pricing. Okay, so adjust price high or low according to the business trends. If you see there is a sudden decline in the demand of the product in the market, so what you get to do is to reduce the price of the product. You can set the product price low so that it will put an upward pressure on the sales and due to the upward pressure in demand. So you can always look at revenue to adjust your pricing. Cost management. High revenue, spend more. Low revenue, cut the cost. Revenue has an impact on your cost management because if you see the revenue is high, then you spend more on things in the business. But if you see the revenue is less, you have to cut the cost. So this way, if you see look at the picture of the revenue, so you keep managing your costs. Expansions. You can do expansions when your revenue is strong, means that there is leftover money on your hand and which encourages the growth. But if the revenue is less or weak, so you have to delay your expansions. So these decisions are also dependent upon your revenue. If your revenue is good enough, so it will guide you to produce or stock your finished products in a good quantity. But if you think that the revenue is less, it's not generating enough revenue from the sales, so you what you need to do is to reduce your stock or the production because you don't want to waste your money. Hiring. If your revenue is good, you are going to hire more employees in your firm because you can afford many employees. But if your revenue is less, so you would not like to, or you would not find it suitable to have more employees as you would be not able to pay their salaries. Investment. If the revenue is good enough, so you can invest your stocks or the pooled money in some investments like stocks, bonds, debentures. Cash flow. Revenue affects daily cash availability. More revenue, more cash flow, and cash flow acts as a blood in the body. As much as important, like the blood is for the body, so the cash is important to the business like that. Without cash flow, the business activities got stuck up and cannot function properly, just like less blood in the body, organs cannot work properly. So, this is the logic behind that. So, that's why the cash flow, the revenue is very important and it impacts all of our business decisions. Strategy. We can create the strategy, we can shape long-term plans with the help of the revenue. And for example, if we come to know that in the season of winters, the revenue from the sale of air conditioners declines substantially, so what we need to do is to create a backup plan instead of stocking up the piles of or the units of air conditioners, air coolers, fans. We need to focus on production of heaters. We need to consider the production of warming things like jackets, sweaters, caps, boots, or some other products that supports winter sales. So yes, with the help of revenue, we can formulate the strategy also. Let's start with the expenses now. What are expenses? According to the definition, costs incurred due to the exclusive activities of the business. Now, first of all, exclusive activities that we discussed in our previous slide of the revenue. What are the exclusive activities? These are the core activities like selling of the, for a bakery, selling of the cake, selling of the pastry, selling of the cookies, selling of the items that are available at the bakery, for example, patties or something like that. And the cost for making these are the cost called expenses. These are the costs which are very important to incur. If we do not incur these costs, our business may not run properly. For example, utility bills. If you don't pay the utility bills, your machines won't work, your light, your machinery won't work. For example, salary expense. If you won't pay the salaries, your employees will not work. In the example of bakery, if you won't buy eggs, if you won't buy flour, if you won't buy sugar, if you won't buy oil, if you won't buy baking soda, it's very sure that you cannot bake a cake, you cannot make a cookie. So these all purchases are the necessary purchases or the costs that you pay to run your business, to generate the revenue. Expenses are simply the costs incurred due to the exclusive activities of the business. Now, I hope that this point would be clear. Or you can say the costs that are necessary to continue the existence of the business. So, business is very much dependent upon these costs. If you do not incur these costs, your business is not going to exist. We are going to discuss this point even more in the next slide, upcoming slide, with the operating expenses. If discontinued, what discontinued? The costs. Businesses will not last if you do not um, invest in the cost of the business. So surely the business is not going to last, like production costs, cost of goods sold, advertising costs, salaries expense, rent expense, etc. These are all the costs that are going to support your business. Expenses are current as they are generated in current accounting period, less than 1 year. So similarly, like revenue, expenses are also going to be paid in 1 year. For example, if you want to delay the expenses, but you cannot delay them more than 1 year, so that's why they are current. Let's see the operating expenses now. This is the first type of the expenses. Expenses basically have two types, and this is one of the type of the expenses. So operating expenses are related day-to-day business operations or core activities of the business. Very, very, very core activities. For example, as I told you, for a car wash company, the car wash needs a detergent, machine oil, or other chemicals, shiner, for example, and salary expense because per car they pay their workers. For running the machine, they need to pay the utility bill, and also to attract the customers, they do some advertising of their company. These all are treated as operating expenses because these all are going to directly impact your business, which is named as a car wash. If you do miss any of these, if you miss out any of these, for example, you will be affecting your car wash business directly or car wash revenue directly. So if you don't want to collect less revenue, you have to do these expenses to support the car wash service sales. I hope this is clear now. So the examples of operating revenue are salaries and wages, rent and utilities, office supplies, marketing and advertising, insurance, maintenance and repairs, cost of services provided. Let's see the non-operating expense. This is the type 2. Expenses not related to regular business operations or core activities of the business. Now suppose that similar car wash company, as I told you, has uh, excess funds and it has invested the funds in a bank, and in the bank he has put his money in the bonds. Half of his money in the bond, number one, half of money in the stocks through a stock exchange, for example, through Pakistan Stock Exchange PSX. Now he is earning two things. Okay, he is earning monthly interest from the bonds, and he is earning, for example, yearly dividend. For example, yearly dividend, or twice a year he is earning, for example. Now, the earnings in the form of interest and in the form of dividends, they are also the profit, but they are labeled as non-operating. Why non-operating? Because they are not generated from the core activities of the business. Can you see here that the bonds and the stocks are coming from the bank, and the bank is not the company's business. Company's business is providing car wash services. So that's why we say that non-operating expenses are all those expenses that are coming from outside the business or other resources or other sources than the business itself. The examples are interest expense, loss on the sale of assets. It is a cost, bank charges, foreign exchange loss, penalties of fines, one-time unusual expense. These are all the examples of non-operating expenses. If you see here, the expense figure is the cost of sales, which is, you know, um, visible over here. So this is cost of sales is basically the cost of selling the products, right? Which is very, very necessary to, you know, bringing the products. For example, cost of sales can include the transportation cost for bringing the uh, goods in the company, the dock charges, the installing charges or other charges like this, or the purchase price of the goods. These all are the cost of the sales. Okay, so now we are going to see the role of expenses in decision making. First of all, expenses help you to control the cost, because expenses help identify areas where cost can be reduced. If you see the expenses are too high, so you would go to analyze that where the costs are unnecessary and where we need to cut the cost. So you can only do this when you have the complete picture of expenses in front of you. You can control the cost very easily by identifying the areas on behalf of watching the expense figure. It can help you in budgeting. You can understand and allocate how much to allocate in terms of the funds to the different departments with the help of expense, because you know that how much expense to be allocated this time, this year, for different departments. If you find that you are going to produce less as compared to the other years, so you are going to give less funds, less cost you are going to pay to the departments. Profit planning. Managers compare expenses with revenues to plan profit targets. Now, definitely, the more revenue, the you can increase, you can cushion your expenses. But if the revenues are already less, so it is not going to cover your expenses, and it can run you in a, negative or loss figure. So, in order to avoid that, you have to plan your profits. by comparing your expenses with the revenues. The less revenue, the less expenses you have to cut the cost, the more revenue you can have a cushion and you can increase your expenses. Pricing decisions, higher expenses may lead to higher product prices. That is the reason why the prices burden are shifted on the shoulders of the customers through the product. If the production cost is high, say the cost of raw material, the cost of labor was already high, right? So this cost is going to be shifted in the product, and then finally the product user gets it in the high price, high price. So definitely it is going to affect the price of the product very adversely. So expenses are going to help you. If you are going to control the expenses, you are going to control the price of the product also. So in that scenario, expenses are very important to understand, to analyze. Then high expenses may delay major investments. If your business expenses are very very high, then definitely you are going to unable to be you are unable to pay your business other liabilities. Also, you will be having less income to invest somewhere in the stocks, bonds, or anywhere, or maybe in your own business for your business expansion and growth. You cannot do it. So that place again, expenses are important to understand. So we need to decline our expenses once we get aware that this year or this month this is going to be not necessary to incur this expense. So this way we can save the income, and when we can save the income we can invest it somewhere. I hope that the basic concept of revenue and expenses were clear, and I hope that this video was helpful to you. But if you have any queries regarding revenue and expenses, you are free to ask in the comment box. Thank you so much for watching the lecture. Till then, take care. Allah Hafiz.